This is the review for 25th of June, which was yesterday. Now, if you pay attention to the title that I've kept for this video, it's Conscious but Painful Trading. Well, it was very conscious. I knew what I was doing, and when I say it's painful, it's not because you lose money or you make money. It's more of you not following the process, or you making those subtle mistakes, or just missing things by ticks, and then seeing those things going in your direction, and then just not being able to find the right entry point is what I say when I say it's painful. It's very painful, not monetarily but mentally. Let's look at all the indices, how they performed and how we reacted. This is the tax index. Now you know, day before 25th, on 24th we had a strong open. Even before that, the overnight market was very strong. After the strong open, we slided a little down to recover all the way back up to the new highs, and then we went all the way back to the lows. And here we are today. The gap was at 23,640. When I say gap, we opened gap up, and the previous day close was 23,640. After opening, we saw the market really weak. I bought here, and if you see, this was well below this range which the market had formed in the overnight, and I bought right here. uh, had a very tight stop, 15 points. I got stopped out. It moved in my favor, and then I got stopped out. uh, then the market retraced a little more to fill the gap, and the moment we hit the gap is when I uh, traded. I bought right there, let the market work out in my favor. It moved 20 plus points in my favor, moved stop to break even, got stopped out. And then I waited for a while. If you see, the bears are in control, and 2 bar retracement is generally the retracement you would see a lot of times. Market retracing 2 bars and shorted right above prior bar highs, added to my position, but the momentum did not seem to be in my favor. Even after we trying to come back up again and then closing right at the lows in the last minutes, I did not see a very good continuation, so I exited my position, and then it came all the way back up. We came up to this point where you would see the bulls trying again, the bears pushing down but failing, in this bar closing right above the 5-minute bar close. It closed right above or around the highs, and that is where I bought. Got stopped out here. This was 22 points, and then what I did was I flipped. Since you'd see from the right open, we've been selling, and shorted here, added to my position, uh, booked some air and then booked some air, while I was thinking of bigger targets, but you can't think directly of bigger targets. If you see it on a 30-minute time frame, somewhere around 5 or 3, somewhere around this area there was a swing low, and that could have been an obvious target. Also, this was a measured move from what happened here, not exactly here. In the overnight market you would have to see, uh, and these were obvious targets. That is where I let the market do what, if it wants to uh, push back now. And I saw it going higher, bought it on the retracement, got stopped out for nothing. And now what you would see is lost little bit here. This was a break even, made some air, lost some air, and then made some air. Overall it was positive, but with the kind of efforts that have been gone, losing 15 points, break even, making, losing 20 or 22 points, and then making them back, and then doing nothing. So much of efforts with very little reward. I won't say was I've done process wise something wrong. I would say it was just not the right day, and I managed it very right by keeping my stop very tight. If we see the Nasdaq, uh, this was the open, went below. If let's look at all the 5 minutes, and you'd see what was happening. This was the opening bar. Good follow through, a bad follow through, went above it, then another bar, and then another which went below it, and then we went above it. So it's basically market seeking and destroying all the stops. Stopped out this fox, stopped this one out, went back up again, stopped out those fox, stopped out anybody who's bought here, went back up again, stopped these fox out, and then came back to stop these fox out. In the opening hour it was doing nothing. I looking at what was happening in the first 30-35 minutes. I did what I wanted to do, which is, if we come back here, we'll go back up to take stops. I bought right here. It moved against me, not very much. This was 20 points, and then it came back, but it was not showing the kind of strength it has showed earlier. You would see we going below and then quickly reacting, and the next candle shows you a follow through, and even here as well. And it did not happen here. And after waiting 15 minutes, I closed my trade around break even, and of course it moved in my favor, and it moved for 30 points, and maybe I would have uh, exited around these areas, because now these people have been stopped out, and maybe we're going to these lows. And I did nothing until the market decide. And when I was saying this, what was going in my mind was, we'd seen seek and destroy algo, and now maybe we formed a channel, and now seek and destroy is off, and the channel would continue. And the idea of the channel right came from here. You'd see right from the open, went here above, came back below, and then we formed a channel. And maybe I thought this is what is going to happen, and I waited for a right opportunity. And if you'd measure right from here to here, do the same from here to here, and then project the same from here to here, uh, these are equal retracement. And I was very ready, but I wanted the market to go around 22 245, which it did not. I missed the entry by 3-4 points, and it bloody well moved in my favor. Now this is where I've even marked it, noted it down, and what I've noted is when you see equal retracements. So the idea was 22 to 45, let's say, and you know it would quickly move from that area as soon as it reached there. And that is when stops come into picture. If you keep a 40-point stop, and at 22 to 45 your 40-point stop would be around 22 to 80, and 40 point is not a very big stop for initial position where you can move it very quickly if it gets in your direction or it does not work out. And comparing the size of the bars we were having, even a 30-point stop would have worked very well. So maybe not being a dick about these ticks, not being wanting the market to show a perfection of to the point, maybe 2 3 points 5 points is something that you should be willing to enter early, is what I noted. Maybe, and we'll see going forward how I work that on that particular goal. Let's look at what happened in the Dow. This was the opening bar. It went below the range low to see a push high, and we've seen a lot of times when we've seen a push high, the next candle generally gets to the lows, and when it get to the low, I bought right here. I had a stop of 44 points, and the stop was right at 4300, uh, and the market came to stop me out, and I felt extremely bad that the moment I got stopped out, it moved in my favor, and me getting stopped out, but I had still the same idea that we I should look for buy setups, and that is why you've seen me taking a buy setup here and even here as well. And the reason was very clear: the Nasdaq was sitting at all-time highs, and the Dow uh, is at the range highs, and we probing the range low. Maybe we'd see higher prices now. And when I got stopped out, it moved in my favor. I bought a prior bar low, but I had a tight stop, got stopped out, and I did nothing. And I waited for the market, since you'd see the same thing happening here. Uh, we seeking and destroying all the stops. And when after these two losing trades, what I did was I did, okay, what is happening? And if you'd measure from here to here, place it here, you'd see an equal retracement, and if you did it here, you'd see an equal retracement. And if you measure this move from here to here and a project here, it would be same, and from here to here is almost same, it's just a little extension. And and this is what I marked, and this was the area which was marked by me. And then I looked at the market, and if you notice, this is around 9:30, and around 9:30, if you look at the Nasdaq, it was not showing any kind of retracement, and it was just drifting down. And and after this pullback, I shorted around this area, that this is a channel as well, and maybe even if we get a retracement to the points where I projected, this in itself would be a 40 points. If you'd see, this is 4300 where I shorted, and this is 43040, which is 40 point stop, and I had my stop right here, and if you'd project, it was right here, and I got stopped out by 2 3 points, only to see the market fall for 120 points in my favor. Even more than 120, it was 42870 from 43070, which is 200 points. Sorry, it's 130 points, 160 points, but the idea is, uh, I mean, in terms of the idea generation, it was w- very well. uh, in terms of execution, maybe I was a little early, uh, a little early had I had somewhere around here, but I was thinking that this is a channel, and what we've seen even this small pullback trend which continues is what I was hoping, and that is why I shorted here, but I had this stop right. But what I'm noticing is in terms of idea generation, I'm doing it quite well now. Some execution, some fears, and still capitalizing on the right opportunity is something that we'll have to work on. Maybe if you project the same retracements from here to here, and you think this is exactly maybe same, and this is where it gets tricky. The entire talk that I gave right here, that what I missed, and if you know I missed it by 5-10 points, I did the same after missing this move. I projected it from here to here, and it was not exactly here. The retracement came around 42.9, 985, somewhere around this area, around these highs is where the retracement came, and I missed it by 15 points, and it bloody well moved in my favor. So the thing is, some a lot of time you'd see it very well to the exact ticks, but when the market had started uh, pushing the leg after the retracement, and it's an extension, generally the retracement reduces, and maybe you should be willing to get an entry 10-15 points off to make off, is what we've learned and will apply going forward. All right, I lost some hair, lost some hair, break even, made some, and whatever I made was pretty much lost, and this was a break even day. Plenty of efforts went into planning these, and the results had nothing but, oh, you just well traded another day, and you wait for the right day to capitalize it very big. Maybe like here, 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 right? Lost here, made here, and this was a very big day. Made here, made here. You're saying this was a break-even trade, and we made here. So it's about surviving another day. Of course, it was a little tricky, and the trick, when I say it's tricky, the reason it is tricky is because if you'd see it on a higher time frame, you'd know we've been very up since the talks of ceasefire, and there's a very big gap, and generally the markets try to fill it, but it's not being very successful in filling the bigger gap, but the previous gaps of the days are being filled, and the market is a little nervous and just deciding what to do. I'm still bullish. I'm still bullish, is what I would say. And maybe today we'll see if it falls, we'll take sell trades. But if it shows some strength, I'm still bullish, and I hope in the decks now. We've been testing these areas. If you look, 23,500, and this is on Friday, sorry, this is on Wednesday, and if you see it on Tuesday, DAX on Tuesday is 23,570 area. So we haven't been much lower, like 60-70 points, and we've touched 23,800, and if we came here, it's 23,740, uh, and by the end of the week, how about if we trade higher than the Tuesdays and Wednesdays highs? but currently we're drifting down. But this day when we opened, we were around 2300, and now you see the difference. We opened around 23 180, and this was also a gap up, and from 23 180 to 23 800, that's like 600 points. And that is the reason I say the market is still bullish. And if we say from 2300 to 28 and then to 25, that seems like a 38% retracement, and maybe we'd see